Today, Bitcoin put in a new low for the crash, down $35,000 from the top, making it the largest correction in the entire bull market to date. Now, we're seeing a slight bounce here for Bitcoin, probably led by the S&P 500, also bouncing off significant support, being the old all-time high back in 2022, and also the NASDAQ finding very significant support at the 50% level. So what happens next? Let's take a look at the cycles, in particular the 10 and 20 year cycle today. Hit the like button, subscribe to the channel, and of course our free report is out today. Link in the top of the video description, name, email address, and you will receive that in about 6 hours time. BTC, I'm going to start with the futures contract here. Now we're using the futures contract here for BTC because the volume data is a little more reliable than some of the other crypto exchanges. Nonetheless, we're starting to see increased volume to the downside, and on these rallies, we're seeing volume drop off. And that goes for some of the other bars that have tested the higher levels, in this case like 89,000, that was a pretty clear rejection level, and then the volume has basically dried up towards that peak, increasing as it started to drop further down. On the very short term here with BTC on the daily chart, it's closed just below the 50% level, $79,200. That's the 50%, and the daily came in at, on the close here, 79,140. So a few bucks short there, pretty much on the money. So this one's going to be an interesting one over the next few days. This current low that is now the new low for this decline, $35,000 right into that bottom, came in at 74,400. Is just a few bucks off the previous all-time high back in March of 2024. So just over 12 months ago. That was the peak. We had the 3-bar rule that put in the top, and then Bitcoin went down for 144 days. Right now, from the top, the $109,000 Trump inauguration top, to the current low is 77 days. So if we do a quick bit of maths here, 77 times 2, 154, about 10 days longer in terms of the 50% there than the previous move here. So roughly around 50% of the time to the downside. And like when we look at 50% levels, sometimes, or often, there can be bounces seen here. So now we've got to distinguish whether this is going to be, whether it is a strong bounce or a weak bounce. And that is going to come once we look at the price ranges. And the resistance levels remain at 89,095. So anything that happens up to these levels can still be rejected, even if it covers past the 89K. The real level here is around 95. And provided this remains the low, we throw on our 50%, that comes in at 92 now. So around these low to mid 90s is going to be the key area that Bitcoin needs to get above, consolidate, and then has the chance to tackle the highs. Otherwise, any sort of move up into these levels would be a relief rally that could lead into, well, another retest of these lows at the 70s or the early 80s, or potentially breaking through those lows. So it's pretty much D-Day decision time for Bitcoin to get above these levels. And so I want to look at the cycles themselves when it comes to the stock market over this period. Now, of course, Trump has done all sorts of things with these tariffs, putting them on, taking them off, talking about removing them. Whatever it is, he is really destroying the certainty around the business environment. And for whatever reason, people believe it can be a good thing. Others think it's a bad thing. I'd rather just let the market do the talking, and the market has said it is not good, that it is destroying business confidence in the US. Now, of course, things can come back from this point, and it's going to happen relatively quickly. Otherwise, we lead into another relief rally bounce, maybe a dead cat bounce, and then a fade out. Particular area that I'm watching here for these relief rallies in terms of timing is coming up through the second part, well, the second half of April into May. So you can see here on the red line using our 10 and 20 year cycles, you've got a movement up into May and then basically sideways, a little down, then back up, straight back to the similar-ish point here, back down into the second half of June, a little rally here into July, and then basically a dump into August. And the rest of the year comes increases from that point. But we're looking at these two particular cycles going back to 2015 and 2005, 2005 relates to the end of the real estate cycle. We haven't seen real estate prices break down yet. Once we get some new data through for March, we'll be able to update this as well. But Redfin is showing all real estate prices in the major capital cities here are increasing, except Boston's gone down a little, but on the national average, very, very close to the previous all-time highs of 432,000 set back in May of 2022. So coming up to 3 years now. But in some areas like LA, you've seen breakouts into new all-time high prices. That's for 925,000 in June 2024. Essentially, overall, the trend remains up. Higher lows and higher highs almost across the board, as I said, with Boston just having a bit of a turn here at the moment, but still above the previous low level. So this one is something that we continue to review here for the macro cycle at hand. 18-year cycle, 18.6-year cycle, winner's curse phase, volatility increases, and we're heading to this peak now. Basically, sometime 2025, 2026, we'll start to see the real estate and the economy peak out here. I guess we could continue to look at what Trump does with these tariffs and how he starts to affect the economy overall. That could be one of the possibilities now that we're getting closer to the end. But of course, we haven't got there yet. Land values have not started coming down, just looking at the data itself, not the headlines from all sorts of media outlets that are telling us that this particular suburb in this city has gone down. That's not the point. We're looking at the national averages here, and the largest cities have continued the trend to the upside. The winner's curse phase also has extreme volatility. We've seen that in August 2024, and recently, just yesterday actually, spiking to 60 and then dropping all the way back down to 46. So the volatility has come in two waves here within a 12-month period. Previously, we hadn't seen anything this extreme, having to go back to the COVID spike. So things are really starting to heat up, even though the prices are much higher than back in March 2020. But that's because of the fear and the emotions of people at these higher prices. Now, I'd even go as far to say that we're possibly seeing extreme or elevated levels of volatility, because just a week ago, like I showed in yesterday's video, we saw the highest amount of retail buyers stepping into stocks to buy the dip, $4.7 billion worth. And so if we're starting to see more retail get into the market, that's generally a sign of more emotions and not able to, I guess, hold it together. Back at the lows, like we were talking about in 2022, we were here on the channel talking about the lows in 2023 with the banking crisis. And then also through 2023 and 2024, first half of the year, there was a lot less retail interest. They were waiting for times on the breakouts. They were waiting for this recession. Everyone was waiting for something. And now we find ourselves much, much higher, and the volatility spikes. Now, I know that for a fact because that's what we were talking about here on the channel. People were not interested. The comments, the replies, going on podcasts with other bearish, long-term perma bears, they were all waiting on something worse to happen. And I guess we got that here after more retail got in based on the data that we saw that week. And so essentially what I'm saying here is we're just expecting the volatility to increase through these periods. And if we do get this, the bounce that I'm looking at with the curve here into May, and we start to see things decline again, I guess we could potentially see that volatility increase yet again. But in terms of the price chart themselves and where this could end up, we're watching for the 50% level. So from the low now to the all-time high, you've got a 50% level that comes in at around 5,500 points, almost on the dot. That, should this low remain, that lines up with the previous swing bottom, basically where the market broke down and things got scary, if you want to call it that. That low was back on the 13th of March. We had the interest of retail buying up the dips at the end of March and early in April, and then of course the dump happened from there. So they basically got wiped out somewhere in the vicinity of 12, 13%. Price is now back up to 5,100, so that's about an 8% drop there from those articles of retail getting into the markets. In the short term, we're at 52, so close back above the yen carry trade low. You've got 5,400, which was also that higher low before the market broke out into new all-time highs. But I'm really very much interested in the 50% level again, because once these levels break down, the fear really does increase at these points. And I guess if that happens, and Bitcoin also has a bit of a rally here through that period, well, then we'll probably see the fear extend out into BTC over that period as well. You know, we're just looking back at the cycle here through the second half of 2025. So, sorry, the second quarter of 2025. Now, it doesn't mean that the entire game is over. It just looks very, very choppy. And potentially, Trump has done enough with these tariffs to absolutely destroy business positive sentiment that we had running into the top. The certainty has definitely been wiped out of the markets. So it could end up being a bit of a choppy market leading into the quarter two. That's going to be much more difficult to be trading BTC, and you'll start to see some of these areas get tested. So the 50% level being up around 92,000, provided we get this breakout. Now, speaking of cryptos, if we've got Bitcoin at that stage and it's rising up, and ETH is still not doing its thing, especially ETH versus BTC, it might only tread water at the same sort of prices here between $14 and somewhere around $1,800. If that's the case, any sort of declines that happen, even if BTC doesn't put in a new low, you know, we're going to rally and drop back down, ETH would obviously be hit harder because it's in a weaker position. Therefore, being able to put in fresh lows from wherever this level is, somewhere around $1,400 at the moment. So basically what that could look like is some rallies up, test these levels at 18, maybe gets as far as previous highs, you know, around 2,000 again, if you're lucky, 1950 perhaps. And then if there is some more weakness, like we've been looking at with the cycle for the stock markets, for BTC as well, if it starts to get rejected at the 50% levels on this particular rally, then ETH is likely going to get hit harder yet again. And taking a look at MicroStrategy, it's been hit relatively hard over the last few days, obviously holding a ton of BTC, somewhere in the vicinity of over 500,000 at an average price of $67,000. So they're not too far off the current price right now. In terms of percentage, got a little bit of a rise here going with BTC, but we take us down to around 67.5, about 16%. So an average price of 67,000. And if we go up from there, they're barely scraping the barrel of a 20% profit on their entire $35 billion worth there. Still pretty good returns, but it's in a very risky position for an asset that can easily do 15, 20% in a matter of days. It literally just did 16% in the last 5 days. So things are getting a little bit close there, but I'm sure Michael Saylor will have something to be said about that. In terms of the stock price, my position since breaking down from the 50% levels is that I'm saying that it's very, very unlikely that MicroStrategy is going to put in a new all-time high for this cycle, especially with where Bitcoin sits. If Bitcoin can get to a new all-time high, still think this is going to be underneath its old all-time high as well. Bitcoin would have to do something extreme, like put in larger gains than what it has done in this particular move. And this last move from 49K to the top was 122%. So I would think that from this low, if this is the low, Bitcoin would have to do more than 122%. For a bit of hopium in the video, let's have a look. 122 takes you up to about 165, and to get to the 180s, you're going to do 150%. I think only in that case would we really start to see MicroStrategy put in some bigger gains again. Otherwise, I think it's going to be a bit of a repeat, a bit of a rhyme from the previous cycle where it had a tough time rallying to get anywhere near the previous all-time high, and then put in a double top, and basically the game was over from that point for MicroStrategy. And from there, we have gold. So once the game is over there, I guess what happens with gold over this period? Because at the same time Bitcoin's been dumping, gold has been absolutely skyrocketing. But, and you always love the buts, 3 days down. Now, I alluded to this in yesterday's video, but the day hadn't closed yet. We were putting in a lower high and a lower low, but now we've got the daily close. 3 big days down, a break of the swing bottom, and a close underneath that swing. The saving grace here on the short term is it just tested the previous all-time high, swing top before the correction, but at the moment this is now overbalancing in price the previous moves. So it's done more in terms of a drawdown in these levels. And we know that from Bitcoin and ETH and Sol that I've shared with you on the channel. When you get an overbalance in price, you look out for the overbalance in time. That's when things can really start to turn around. Now, of course, for gold, with the volatility, it is a trader's paradise. And gold's just been launched on Bybit. Link in the video description. You can jump on board for the unlocking the $1,000 position airdrop if you want to look at trading any sorts of gold contracts over there. But in terms of the position here, increasing volume, large days down, and the next reference is looking at the time frames to the downside, 4 days here, and from the next correction, you've got about 5 days as well. So the next couple of days are going to be very, very important for gold. It'll need to put in a new all-time high. Otherwise, this is part of an overbalance in time and price. Very early days. You guys know the deal when it comes to the 3 days down, just how long these things can last. And like we saw in this previous one here, 1, inside 2, 3, this held up the move to the upside longer than any of the previous corrections in that entire run from $2,600 up to nearly $3,000. So in gold's numbers, that's a pretty significant move. So we could be seeing a slowdown here for gold with a potential rally on the stock markets, which could lead to another potential rally here on Bitcoin. You're seeing a reasonable bounce as I'm filming this at the moment, $80,400. We've looked at the key levels overhead for any sort of signs of strength or weakness. Rallies up into these levels of around $92,000 to $95,000 should be met with extreme caution for any sort of major complacency bounce. And lastly, on the good news, with part of this rally that's going on at the moment is, well, good news for the bulls, is the USDT dominance has broken out to the upside, which is bearish, but on the daily has reversed. So a pretty significant move to the upside, pretty significant volume. Forget this volume on this side. The day hasn't closed yet, and there's a little bit of the data doesn't catch up here when it comes to the current day's action. So forget this. But looking at yesterday, big spike up, big reversal, which is a rejection on the bearish case, leading to the bullish case for your Bitcoin and cryptocurrencies. So at the moment, if this is able to continue to crash, that's going to be a good sign for Bitcoin, potentially a good sign for the other large caps. Sol did have a day underneath $100, now at 110. XRP tested its 50%, now sitting just back above that level as well, around $1.90, but still no excessive volume coming back. As you can see here on the Binance chart, you really do need to see some pretty significant volume to get XRP going. Same sort of deal for Solana and ETH. You can see the volume here is still lower than the other significant days of action, which leads me to believe that this is just part of a bit of a relief rally, at least on these major altcoins. And while we're at it, a quick look at ETH as well. Some volumes come in here, but again, still lower than the rest of these moves. So I'm going to be watching the key levels as I've talked about in today's video for any signs of rejection, or can we get an invalidation, a break above those levels, and the strength comes back to the crypto space? One final thing before I go, this one's super important, is the market sentiment. A countdown here on the days, and the days to go, roughly about 2.5 weeks, 17 days left for this 154. This has been shown previous times, looking at the market sentiment resetting in the bull markets. For the bears at least, looking at the peaks to the troughs and the higher lows, it's basically doubled that period. So instead of it being 5 months, it turns out to be about 10 months through those bear markets. And that's what we saw in the 2022 bear market. And if the data was around for 2018 bear market, you'd also have a pretty long time frame there. So taking a look at these lows all the way back to those tops there, it's about 300 days. Take you somewhere about 300, 350 days on that market sentiment reset. So watching this like a hawk, watching those price levels like a hawk, and of course watching the composite cycles for the stock markets as we lead into the second half of 2025. Like, subscribe, don't go anywhere. Things look like they're just starting to get a little bit interesting again after Bitcoin putting in a new fresh low here. Thanks again for watching. and I'll see you guys back at the next video. Till then, take care. Peace out.